Welcome back to The Explainer. So glad you're joining us today. Look, if you've been keeping an eye on the packaging and polymer markets lately, you already know things are incredibly volatile right now. Having the right data at the exact right moment, it's not just a nice to have anymore, it's absolutely essential for your bottom line. So today we're bringing you a rapid, highly actionable market explainer focused specifically on BOPET film pricing for the third week of July 2026. We've got a lot of ground to cover, from sudden price hikes to the hidden macroeconomic drivers pulling the strings behind the scenes. So let's just jump right in. Now, to get to the absolute ground truth of what's happening out there, we're pulling our data today directly from Polymer Bazaar. For the industry veterans tuning in, you already know their weekly reports are super highly anticipated. And honestly, for good reason. Their core focus on price, prediction, and profit is exactly the lens we need to decode the current landscape. We're going to dig into the data they've just released, but more importantly, we're going to pivot straight into the core issue that's actually impacting converter margins right this second. Because we aren't just looking at dry numbers here. We're looking at the real story those numbers tell about supply, demand, and literally surviving in a high-stakes market.
All right, let's look at current pricing and market revisions.
Okay, let's really dive into this and compare the numbers for BOPET 12-micron plain film. We're going to focus specifically on the indoor market. Now, notice the discrepancy here, because it's pretty revealing. The official company prices are currently sitting at 120 to 122 rupees per kilo, plus GST. But check out the Open Bazaar column. Those prices are actually being quoted higher at 123 to 124 rupees per kilo. What's really fascinating about this kind of spread is that whenever the Open Bazaar starts pricing higher than the baseline company rates, it's basically a flashing red light signaling upward market pressure. It tells us that demand, or maybe just sheer anxiety over future supply, is already baking a premium right into the street price.
And you know what? That market anxiety was entirely justified. Here is the big move, the absolute bottom line you need to take away today. Producers have officially pushed prices up. We're looking at a confirmed across-the-board hike of 5 to 6 rupees per kilo. And this isn't some distant projection for next month either. This went into effect immediately, back on July 18th, 2026. Look, if you're a buyer or a converter, a sudden 5 to 6 rupee jump per kilo, that literally completely rewrites your margin calculations for the entire quarter. Now, before we deconstruct the why behind this massive hike, I just want to briefly mention how you can actually stay ahead of these kinds of shocks. In a market where prices can just jump overnight, waiting around for traditional reporting delays can seriously cost you. So Polymer Bazaar has actually rolled out an AI-powered chatbot that completely eliminates that lag. All you have to do is WhatsApp the word prediction to +91 93746 24365, and you get these critical updates instantly on your phone. We're talking within literally 5 seconds. It is a fantastic tool to keep in your back pocket just to make absolutely sure you're never caught off guard by a 6 rupee hike ever again. Which brings us to the absolutely crucial question that's probably on every single converter's mind right now. What exactly is supporting this sudden price increase? I mean, we've seen the micro-level raw data from indoor, sure, but to understand if this hike is actually going to stick, we have to zoom out to the macro-level drivers. Because let's face it, prices just don't jump 6 rupees in a total vacuum. And this brilliantly illustrates what we're dealing with right now. We are basically watching a perfect storm of factors at play. There isn't just one single catalyst here. There are 4 major macroeconomic drivers all converging at the exact same time. First up, we've got the re-implementation of the import duty, which instantly alters the cost floor for any imported alternatives. Second, we're seeing a massive surge in feedstock costs, which directly drives up the price of PET chips, and that is the foundational building block for this film. Third, geopolitical developments are just pushing energy and raw material expenses higher across the entire globe, making these factories way more expensive to run. And finally, there's a really distinct tightness in selective raw material segments. When you have restricted raw materials, spiking energy costs, skyrocketing PET chip prices, and new duties all hitting simultaneously, a sharp price correction is practically mathematically guaranteed. But to really understand the psychology behind this hike, we've got to look at the historical context. When you compare it to its sister material, BOPP, BOPF film had actually been seriously underperforming over the last few months. In fact, producers were operating with negative margins. They were literally losing money on what they were making, which, as any business owner out there knows, is definitely not a sustainable strategy. So when you take those 4 massive cost pressures we just talked about, and you stack them on top of a product that was already bleeding cash, you realize that these mounting cost pressures made this hike completely inevitable. The producers simply had zero margin left to absorb the shock. They just had to pass it on to the market.
So, how does this actually translate to the immediate market reaction? Like, how do buyers behave when they realize the floor has just been completely raised? Well, step one, converters immediately accelerated their purchases. It makes sense, right? When you know a hike is here and suspect more might be coming, you buy ahead to secure inventory against any further cost escalations. Step two, because of all this buying activity, fresh supplies are entering the open bazaar, which is helping improve order inflows. But step three is probably the most telling of all. Despite that accelerated buying, purchasers are keeping their focus strictly on immediate needs. It's a highly defensive posture. They're buying what they absolutely must to lock in today's price, but they definitely aren't wildly overextending themselves either. So, the crucial point we're all wondering is, where do we go from here? For that, we turn to the official Polymer Bazaar view. Their assessment is super clear. BOPET film prices are expected to remain firm in the near term. Because of that elevated duty support we discussed, the ongoing raw material tightness, and those really high feedstock costs, they do not see these prices retreating anytime soon. The new floor has officially been set. And honestly, there is a pretty stark warning hidden right in this data. If those underlying costs, specifically feedstock and PET chips, climb even a little bit further alongside this stronger buying activity, producers are absolutely poised to demand even higher prices. Remember, they are just barely coming out of a brutal period of negative margins. That makes them incredibly sensitive to any further cost increases. And you can bet they won't hesitate to push through another hike if the raw materials dictate it. If you want to predict the market's next move, well, here's your roadmap. The future direction really hinges entirely on tracking three specific variables. First up, raw material availability. Does that tightness start to ease up at all? Second, producers' order books. How full are they right now from all that accelerated buying we just discussed? And third, of course, downstream demand. Which actually brings us to our final defining question for this explainer. Will downstream buying actually continue to support these higher costs? It's one thing for converters to buy defensively today, right? But it's a whole other game for the end consumer market to absorb that cost tomorrow. That is going to be the true test of market sustainability. I highly encourage you to keep a really close eye on this. For the full, comprehensive data breakdown, you can always visit polymerbazaar.com or just directly call their team at +91 93754 24365. Keep questioning the data, keep tracking those margins, and I will see you in the next explainer.